Got Brent at 100. Is that the right price if we're heading to a recession? Are we heading to a recession?
Uh, my crystal ball is broken, so I don't know.
Okay.
I do know that oil does seem too low relative to very tight supplies and relative to quite healthy demand.
Josh, let's talk about the trade-off here between crude and natural gas, because of course we know in Europe there is this major crisis going on with soaring natural gas prices. But here in the States, it's a different trade here where you do have, at least for all these utilities, this idea that if natural gas is getting too expensive, they're going to kind of feed back in and help or need more crude oil. How much of that source of demand could help lift prices?
Yeah, I think it's great that you're talking about that, and it's a huge factor that hasn't really been covered that much. So this past winter, it looks like there was as much as 2 million barrels a day of demand for power and for heat, mostly in Europe, but also a little bit in Asia. And I've seen estimates of as much as potentially, and this is on the high end, 5 million barrels a day of potential demand, especially as European and Asian natural gas prices price in close to $300 per barrel equivalent. So that's a very high price relative to the current price for oil. And I haven't really seen this too much in sell-side models. And I think there's a real potential for demand to surprise. And again, you can see oil prices falling. And so it kind of sounds weird to be very bullish on oil while the short-term price is moving. But I mean, just look at the fundamentals and they look very strong.
If we were to see the Russians cutting gas off from Europe, how extended does that trade become?
Yeah, I mean, we're already seeing them cut it off to some extent. So Nord Stream 1 is under maintenance. Their deliveries have been falling off around the same time that the Freeport facility here in the US that was exporting gas had an explosion. And so, we're already seeing reduced supplies to Europe, which is, I think, part of the contributor to higher European natural gas prices. And, I think obviously if Russia cuts off more, then that could be even more extreme. But in the current circumstance, even if Russia resumes limited flows of gas, and even as Nord Stream 1 comes back online, there could still be a pretty big disconnect, and there could still be much more oil burn for power and this winter for heat than it looks like people are expecting.
Josh, it kind of sounds like you're saying no matter what, correct me if I'm wrong, but no matter what, there is kind of this bull case for oil, similar to, I guess, the arguments we make even in the housing market, that even if there is that decelerating story, there is still a massive shortage in the markets. I have to ask, though, what alleviates that? What kind of time frame are we looking at?
Yeah, so I think better policy would alleviate it, but I wouldn't hold my breath on that. Either a very deep recession where there's so much power demand destruction as well as transportation demand destruction that you actually see the market balance out. And it seems like the market's starting to price that in right now. Although, again, who knows? And it does look like maybe the short-term recession calls might be a little overstated. But in the medium term, if you see a lot more drilling and you also just see a slower global economy, that could sort of balance things out, likely at much higher oil prices than today.
A lot of people have done well by being in oil companies this year. It's been one of the few places on the stock market that has performed. They're starting to get nervous as they see crude coming down as sharply as we've seen over the last few days. What would you say to those people? Stick with the trade. If you're in that trade, where do you want to be?
Yeah, so the consensus from a sell-side perspective is that these stocks are pricing in $55 to $60 oil. Oil and gas stocks were very unpopular for many years, and they've only very recently started to outperform. So a lot of the money that's in it is sort of hot money and is new to the sector, and I think is a little bit unfamiliar with the huge volatility that we've experienced over the last number of years. And so I think there's sort of this trade-off in between accepting additional volatility while accepting additional returns. And the more volatility and the more of these sort of pullbacks that we've seen, I mean, we've seen a number of these very high percentage pullbacks since this oil bull market started in November of 2020, the more volatility there is, the harder it is for the sector to deploy capital. And the harder it is to deploy capital and attract capital, the higher the oil price needs to be and the higher the return on investment needs to be to get that capital deployed. So I think oil and gas stocks are very mispriced. And again, it feels funny saying this with oil down and the stocks down even more, but this has happened many times before, and it does look like we are in this sort of secular or super cycle bull market for oil, even as we experience these pretty painful pullbacks on the equities and on the commodity.
Josh, let's talk about the natural gas side of the equation here, because there is a almost insulation when it comes to American markets, just given that natural gas isn't as used perhaps in the United States as it is in Europe, and therefore perhaps insulated from some of the soaring gas pressures that you are seeing across the Atlantic. But I'm curious, as the United States looks to create that infrastructure, deploy that capital, as you said, and actually export natural gas more and more, is that a trade that works perhaps in the longer term?
Yeah, I mean, it looks like we're exporting just over 10 billion cubic feet a day of gas. And we have some projects that are planned that could get us closer to 18 BCF a day over the next 5 or so years. And so that would obviously be a very significant factor to the local gas market, as well as more adequately supplying the global liquefied natural gas market. There's been this really big disconnect in local natural gas prices as Freeport came offline and as the repairs there have taken longer than one might reasonably expect, given how important that gas is for Europe. And so, we've seen this very rapid, very significant move down in natural gas prices, which again is, I think, scaring away capital investment here in the shorter term and may lead to much higher natural gas prices once Freeport comes back online and as we get into the next demand season coming this winter. So yeah, I think U.S. natural gas exported is fantastic for the world. I think having low natural gas prices here right now is a huge advantage for the U.S. economy and is likely going to help in the short term in terms of lowering costs for businesses and maybe even bringing energy intensive businesses and extra utilization for those businesses here versus Europe.